You're very welcome to the Sherry Fitzgerald First Time Buyer webinar. My name is Colin Byrne, Director and Head of Sales of Sherry Fitzgerald New Homes, and I'll be your host today for what's our first webinar of 2026. This is now our 10th edition of our First Time Buyer webinar, which we commenced back in 2023. The aim of these webinars is to help assist and educate first-time buyers looking to purchase their first home around the various government incentive schemes available, along with tips on how to get mortgage ready. We also like to highlight our up and coming launches of new and existing developments across the national team and keep attendees up to date on the various unit types available in each of these developments. The title of today's webinar is Preparing to Buy in 2026, and I'm delighted to be joined once again by our guest speaker, Michael Broderick, CEO of the First Home Scheme, alongside my colleagues Marguerite Boyle, Director of Sherry Fitzgerald New Homes, and Ronan Richardson, Associate Director from our Sherry Fitzgerald Financial Services team. Marguerite, Michael, Ronan, you're all very welcome. We're looking forward to your presentation. Ronan's going to start us off today with an overview of the mortgage process and tips on how to get yourself mortgage ready. Michael will then take up his presentation on the First Home Scheme and how it works, along with how it can help you get your first home. It was first introduced in summer 2022 and it's been very successful. So well done to Michael and his team on that. And then Marguerite will then conclude the presentations with an update on the Help to Buy scheme, along with other recent government initiatives to help the supply of new homes. Marguerite will also highlight some of our existing upcoming new developments featuring apartments, duplexes and houses. Before we get started, just want to go through a few housekeeping items. We're conscious everyone's busy, so we're going to aim to finish at around 1:45. Presentations will take approximately 25 to 30 minutes and we have time for questions at the end of each presentation. We've received a large volume of questions, most of which will be answered during the presentations, but we have a few then for the presenters at the end. If you have any questions during the webinar, feel free to pop them in the Q&A box and we'll try and cover them off if we can. The webinar is being recorded and the slides will be emailed to everyone who's registered with a link of the recording. Okay, mortgage intro. Ronan, we're going to get started with you. Buying your first home can be daunting, and when it comes to getting a mortgage, you need an expert to assist. You guys are our financial services team, so you're gonna help guide us through the process.
Absolutely, Colin. Thanks very much for the intro. Yes, hello everybody. Delighted to be here. I work in our brokerage division, dealing with mortgages, mortgage protection, and all related insurances. For the next 10 minutes, I'm going to focus on one thing: how to get mortgage ready. Not just in theory, but in a way that actually gets you approved, gets you sale agreed, and obviously gets you your keys. And just to say from the outset that the reason many people choose to use a broker such as ourselves is simple. A mortgage isn't just about getting a yes from a bank. It's about getting the right lender with the right structure and the smoothest path to draw down with the least stress possible. So I'll take you through the key readiness points, I suppose, that lenders care about, and also advise you on where a broker adds real value and why using Sherry Fitzgerald mortgages can make a genuine difference for first-time buyers. Move on there, Connor, on to the next slide. So crucially, how to get mortgage ready. Mortgage readiness typically boils down to three questions. How much can I borrow? What do I need to qualify? And what's important to the lender? And here's the important part in all of this. These aren't just information questions, they're strategy questions. Two people can have the same income and deposit, and one gets approval smoothly while the other gets delayed, often because of how the application is structured and presented. That's where working with a broker really matters. We just don't help you apply, we help you apply properly to the right lender with the right documentation and the right story, ultimately presenting you in the best possible light for a swift drawdown. So let's break it down onto the next slide, which boils down onto, how much can I borrow, which is a question that's often to the fore with most first-time buyers. And there's four key drivers, which I kind of just want to break down first of all. So first of all, we have your guaranteed and variable pay. And obviously lenders love guaranteed income, which is your basic salary, your fixed allowances, such as maybe a car allowance. However, variable income like a bonus or commission can also be included. but it depends on consistency. And this is a big reason why clients use brokers, because different lenders treat variable income differently. Some are really conservative, some are a lot more flexible once it's well evidenced. The most conservative perspective, you might look at a 3-year track record, but other lenders can indeed work with 1 year. Another key driver is age and maximum term. Age affects your mortgage term, and the term affects affordability. Uh, the longer the term, the lower the monthly repayment. And this can, in many ways, from an affordability perspective, support your approval. Another key driver is outgoings and commitments. Other loans can matter. Car loans, credit union loans, personal loans, and even things like childcare, because they're ongoing obligations. We'll work with you to assess how we manage that most effectively to getting your mortgage approval. Sometimes it can matter, but sometimes, depending on your circumstances, it may not actually have a huge impact. Other living expenses can also apply, and this is where lenders look at bank statements. They're asking, crucially, is this applicant already living at their limit, or do they have room for a mortgage repayment? Now, one really important point for 2026 is that rates can change during your mortgage journey. A lot of lenders can, I suppose, improve pricing between your mortgage approval in principle and at the point you go to full loan offer and drawdown. So, for example, you might hear maybe from a friend, someone say, I got approved at X percent, whatever, 4%, but by drawdown, they may land on a lower rate because lenders repriced or brought out a fixed or a better option. And that's, again, another huge advantage of using a broker. We constantly track lender rates, and we can make sure that you're on the best available rate at the time you draw down, not just the rate that was available to you when you first applied. So moving on to the next slide, on what you need to do to qualify. And there's a few key segments here. So first of all, deposit and savings. Lenders want the deposit, but most importantly, they want to see you save consistently. Even if part of the deposit is gifted, or of course, if you're using the Help to Buy or First Home scheme, as Michael will elaborate on later, your savings are important nonetheless, because in a lot of cases, they want evidence that you personally have the repayment capacity to pay your mortgage. And this goes back to living within your limits or having scope to maybe pay another outgoing. Employment status is also very important. PAYE permanent roles are usually straightforward. This is where you work on a full-time permanent contract with a company. You get paid your salary weekly, monthly, or fortnightly. Probation, fixed-term contracts, or self-employed can require a little bit more work on our perspective. It doesn't mean that you can't get a mortgage. It just means that we need to present the case properly. And again, this is where we add value. Instead of going to one bank and crossing your fingers and hoping they say yes, we match you to the lender whose policy best fits your situation. And importantly, understanding costs. Beyond your deposit and your mortgage, there are other costs. So it's important to consider your solicitor fees, valuation fees. Maybe, you may want to get somebody to assist you with snagging on a new build, or maybe on a second-hand home, you may wish a survey report, stamp duty. And with Sherry Fitzgerald Mortgages, we map out the full journey for you, from approval to bidding or not if you're buying from our new homes team, to sale agreed, to loan offer, to drawdown. So ultimately, there are no surprises in this journey for you. So moving on to what is important for the lender. This slide is really about the lender mindset. So we're kind of going to the other side of the house and what they care about most. And again, it varies from bank to bank. But repayment ability. So banks and lenders will often stress test affordability. They want confidence that you can manage repayments, not just today, but if rates rise. A simple tip: if you're targeting a repayment of, let's say, 1,800 per month, 1,800, showing savings plus rent close to that figure is a major positive when borrowing. Credit history, and this doesn't just mean if you tend to use credit cards or not, but it can mean that you've no missed repayments, you've no persistent overdrafts, or what's also key here is that if you have any direct debit or loan repayments that they're paid on time and in full. Sometimes clients ask us about lifestyle spending behavior. Lenders aren't judging what you spend your money on. They're purely assessing risk. So, for example, heavy or constant short-term credit or end-of-the-month financial pressure can weaken an application. Another really practical area in 2026 is green rates. Many lenders offer better rates for energy efficient homes, usually BER A or BER B. And this is very pertinent for the properties that we sell in Sherry Fitzgerald because most new homes tend to be of a BER A classification. This can make a meaningful difference to repayments, especially over a fixed term, but timing can matter. So typically, lenders will want to see some evidence of the building energy rating or BER, and for new builds, the BER can potentially arrive a little bit later in the process when the property is nearly completed. So I suppose part of our role as brokers is making sure that you don't miss out on a green rate simply because the paperwork wasn't ready at the right moment or because maybe the wrong product was selected earlier. That's what we are here to do. We package the application correctly, deal with underwriter queries, and keep the process moving all the way to loan offer and drawdown. And the reason clients use Sherry Fitzgerald mortgages in particular is that we do volume in this market. We know lender requirements inside out. And we're also connected to the broader Sherry Fitzgerald property and, of course, our friends and colleagues in the New Homes Network, which helps clients typically move faster in a competitive marketplace, putting their best foot forward always. So moving on to probably the final segment of our discussion here on our helpful links. So what you've got here is our guide on getting mortgage ready, our guide to our mortgage calculator, and links to booking an appointment. And my best advice here is don't wait until you find the dream house. Speak to us early, even 6, 12 months before buying, because the earlier we see your situation, the more we can do to maximize borrowing, prevent delays, and to make sure you're ready to move fast when the right property comes along. And just to finish on a very practical note, choosing the right rate and making sure you qualify for any green rate available can save a surprising amount over the first few years. That's something we always check for you. Folks, thanks a million for your time today. I look forward to hopefully talking to some of you over the coming months, and I'll hand you back over now.
Thanks, Ronan. That was really comprehensive. I can see some questions coming in that you've already answered there on green mortgages and savings, but there are just one or two that I might just run through with you. There's one there. Can I get a mortgage on probation in a new job, even if I have the same savings and circumstances?
Great question. In short, Colin, the answer is yes. Different lenders deal with this differently. Some lenders would like you to have your probation to be completed before you sale agree a property and move to loan offer. Others have flexibility here at drawdown. We know that it can take a little while to find the ideal property and crucially a little bit longer to get the keys. So I would say in this situation, talk to us early and we'll place you with the right lender to ensure that being on probation doesn't negatively impact your mortgage journey.
Thanks, Ronan. And then just one more for you. I suppose again, there's been a bit around the do's and don'ts on banking activity and stuff, but there's one here just I suppose, and it's probably the big ticket items in terms of other credit. Should I pay off my car loan early? And probably the same goes for a large credit card balance as well, if someone's asking.
Talk to us before you do anything like that. You may not want to pay off the car loan. You may want to keep that money aside for your ancillaries, your stamp duty, your legal duty, some of your down payment. We have access to all the lender calculators on the market, so we can tell you upfront if that outgoing is going to negatively affect your application or not. If it does, no need to hurry to pay that off. We can, in a lot of cases, just add a condition that that loan be cleared maybe at loan offer or drawdown, so no stress there.
And then I suppose just to finish on a relevant one from a Sherry Fitzgerald point of view is will Sherry Fitzgerald help me with the process instead of going to the bank and receiving the approval, which I suppose the big thing for you is that you go to more than one bank.
Absolutely. We are in business to make this process as smooth and as stress-free as possible. The process of buying can sometimes be daunting, But if we can remove one element of stress, it is indeed in the mortgage journey. We're here to support you from now until you get the keys for the properties. We look at all the lenders, and ultimately, our job is to place you with the lender that matches your circumstances at that particular point of time, and ultimately ensure that the money you're borrowing is at the best possible rates.
Brilliant. Thank you very much, Ronan. That was great.
Thanks, Colin. Not at all.
We're going to move on to Michael Broderick, CEO of First Home. I think since its introduction, Michael, you've nearly almost just under 5,000 people now with drawn down facilities and living in their new homes. And I suppose from our perspective, we've spoken on this a couple of times. We're seeing at all of, at our launches in the tail end of 2025 and even the early days of 2026, probably in certain schemes, definitely 50% of qualifying homes being bought are people using the first home scheme, and in some cases it's a little bit higher and lower, but on average it's around half, which is a great figure to see. So I'll hand over to you to tell us how it all works.
Thanks very much, Colin, and thanks for that introduction. We just move on to the first slide there, Connor. Thank you. So the first thing I'm going to talk about is, I suppose the question from your perspective is how can the first homes get help me? And I'm going to deal with that. I'm going to explain a little bit about what it is, when it was set up, and go through the process at a very high level, and then some of the details around it. So we just move on to the first slide there. I suppose what it is. So first and foremost, it's a 740 million euro fund. An additional 340 million was committed in 24 because of the success of the scheme. To Colin's point there, and it was put together by the government and the three main banks. So it's often referred to as the government equity scheme, but people tend to ignore the fact that the banks are heavily involved in it. So if you get your mortgage from AIB, Bank of Ireland, or PTSB, or indeed Haven or EBS as part of the AIB group, they are the members of this scheme. And I suppose that's an important point as well. If you want to use the scheme, you must get your mortgage from one of those lenders. So it's the three main banks: AIB, Bank of Ireland, PTSB, and then EBS and Haven, because they actually put money into the scheme. So if you get your mortgage from, say, Bank of Ireland, then half of the funding that you get from the first home scheme will come from Bank of Ireland, and the other half will come from the government. So it's not just the government, the banks are involved in this as well. Some of the myths that we constantly encounter when we're out in the ground talking to people. So the first one is it's a second mortgage. I think people are beginning to realize and understand now that it's not. And hopefully, as I go through this presentation, you'll see why it's not, and I'll further explain that and elaborate on that point. The other one we get frequently is the government won't own part of my home. But the fact of the matter is the government won't. First home scheme, if we give you money, we will take an equity share in your property. Now, we are partially owned by the government, so indirectly you could argue yes. But I suppose the key point here is, I'm not sure why people would be worried or concerned about that, because it's equivalent to asking the same question is, do you consider the bank who provided you with a mortgage as owning your home? And most of us would not. And it's no different here with the first home scheme. We'll give you your funding, we provide you with annual statements. And other than that, we will not generally be engaging with you. We have far too much to be doing. I mean, I've been asked questions like, if I want to change the color of my house, do I have to get permission? No, you don't. We don't care what color your house is. So it's just if you clarify and clear up those few points, because there is a lot of misinformation out there, particularly on social media. So we just move on then to the next one, Connor, in terms of who's the first home scheme for. So it's for first-time buyers. And first-time buyers, is exactly as it says. It's somebody who hasn't owned or purchased a property previously in the Republic of Ireland or indeed anywhere else. It's also open to people under the Fresh Start principle, and there's a little bit of confusion around what is the definition of Fresh Start. So just to be clear, Fresh Start only applies to somebody who's been in a relationship, and as part of that relationship, there has been a shared property. That relationship, unfortunately, is no longer in situ. So the property has now been disposed of, and you have gotten rid of your interest in the property. So that relationship is no longer there. Both parties have gone their separate ways. The property may have been sold or whatever it may be, and now you have no interest. So it's only if you were involved in a relationship where there was a property or a house involved. It also applies, which is a much smaller cohort of people, to somebody if they were bankrupt previously, they can also avail of it. But it's only for those people. If you bought a home by yourself previously and sold that home and you don't have one now, but you want to buy again, unfortunately, the scheme is not open to you because you don't qualify then as a first-time buyer, or you don't qualify under the Fresh Start principle. Just to clarify that. You must get senior mortgage approval from one of the four banks. Well, the three main lenders and the five banks actually that I called out a few moments ago in the previous slide. And you must maximize the mortgage available to you. So if you're being offered four times your salary or indeed more, you must take that. You cannot use the first home scheme to replace debt or replace your mortgage. It's meant to bridge a gap. It's not meant to replace it. So you must maximize. And we obviously cooperate with the banks. We will know from the letter of offer exactly how much they're offering you. So it is important that you realise you cannot replace mortgage with the first home scheme. The maximum percentage of equity available to you is depending on whether or not you're using the Help to Buy scheme. So if you're using the Help to Buy, it's 20% of the value of the property subject to price ceilings, which I'll come on to in a moment. If you're not using Help to Buy for whatever reason, and there are reasons why people mightn't use it, for example, if you haven't been working for 4 years and earned the maximum amount, or indeed if the amount you can get from the first home scheme or from the Help to Buy, a big pardon, is so small, you might be able to get more from the first home scheme. So it will depend again, and I'm sure this is where Ronan and his team will be very helpful in explaining and talking you through that. And that's what we recommend, that you go and you talk to a broker and get advice on this, because it will vary depending on your circumstances. So just moving on to the next slide then, Connor, what we'll do here is we'll talk about an example of how it might work for you. So really, I suppose in essence, what this scheme is for somebody who's gone through the process referred to by Rowan previously. They've now gotten a mortgage offer. They know the property that they would like to buy. They know the value of the property they'd like to buy. They know how much they're getting in their mortgage, and they suddenly realise there's a gap between the two. You must also have a deposit, and I'll talk about that in a moment. But let's say you have a gap between your mortgage, between the deposit, and the price of the property that you're hoping to buy. That's where the first home scheme can come in and bridge that gap, or give you the difference between the funding stack that you have, or the amount of money that you have available to you, and the cost or the price of that new home. So I have a simple example here. So let's say it's an individual or a couple, they're looking to purchase a property. The property is going to cost €400,000. The maximum mortgage that they can get on that basis of a salary of 75,000. Now that can be joint or single, is going to be 4 times 75, which is 300,000. In terms of a deposit, they must have 10% of the value of the property. Now, this is often considered to be a stumbling block for a lot of people, because we get constant narrative that, or we hear constantly here that, well, there's no way I could save €40,000 to take me 20 years to save that. And it is very difficult to save €40,000. But the great news is, and this is what a lot of people don't understand, is that you don't need to save €40,000, because if you avail of the Help to Buy scheme, and I know Marguerite's going to talk in detail about this later, so I'm not going to steal her thunder on this, but all I say to you is just be conscious of this. You do not need to save the full 10% yourself. You can use the Help to Buy scheme to assist you, and it's a fantastic scheme. It's nothing to do with our scheme, but the key point is it can be used in conjunction with it. And I know Marguerite, as I say, is going to talk about that in more detail. So be cognizant of that. And in this case here, where somebody needs to save €40,000, they're getting the maximum they available to them under Help to Buy, so that's 30. So in essence, all they have to save here is €10,000 for the deposit. You will, of course, need some extra funding for fees, legal fees, etc. And also then if you want to fit out your house. But in terms of the actual deposit, in this particular example, all you need to save is €10,000. But we still have a dilemma here, because we now have 340,000 available as part of my funding stack, but I want to buy a house, and the house is going to cost me €400,000. So this is where the first home scheme come in. You can actually apply to the scheme, and in this scenario here, assuming you qualify, we can give you €60,000 in the form of an equity share, and that's 15% of the property value. We can give you that. It allows you to close your sale and get your property, and now you're on the property ladder, and you've purchased a home that a few months previous you thought was completely out of your reach, because you had that big funding gap between your mortgage deposit and the price of the home. So if we move on to the next slide, we'll just talk here about the 3 products available. So I suppose in relation to today's presentation, the one that's most relevant here is the very first one. It's new build. So it's basically for people who are looking to buy a new home in a development. In other words, your estate anywhere around the country. So it's called the new build product. We then have another one for tenants, and this is the only scenario in which we fund a second-hand property. So if you're a tenant in a property, your landlord is selling, they've issued you with a notice of termination, you'd like to buy the property that you've been renting, then you can use the first home scheme again to bridge a funding gap you might have between your mortgage and your deposit. And the final product we offer, the third one, is a self-built product. Again, if you have a site and you're fortunate enough to be building your own home, well, then we can actually assist you with the funding on that also. So again, if we move on to the next slide, qualification criteria. So the minimum equity facility we will provide you with is 2.5% of the property value, or €10,000, whichever is greater. So if you're short 5, 6, 7,000 euro, there are easier ways of raising that rather than going out down the road to taking out. So it's a little bit, that'd be a little bit akin to taking out a mortgage for 7,000 euro. You're not going to do that. It's the same here. There is a bit of complexity to it. There are some costs associated with it. Not from your perspective, but it's not worth our while, I suppose, to providing anything under 10,000 euro. There is an interactive calculator on the First Home Scheme website. So if you're unsure about how much you might qualify for, go onto the website, go onto the interactive calculator, and it'll tell you exactly. I know Sherry Fitz have a very good site as well, and they have other calculators there. But if you want to find it or if your query relates specifically to the First Home Scheme, you can have a look there, and it'll tell you. The key point from our perspective is, and people often ask, what about my salary? What about my credit history? All the questions that Rona was asking or answering there in relation to, or dealing with in relation to a mortgage. So the key point here is we do not ask you any of those questions. And you might think, well, why would you give me all this money and not ask me? The reason is because we're shareholders are the banks that we talked about. So if you're getting a mortgage from one of those banks, and Ronan and his team and the banks have done their underwriting on you, we will accept that on the basis that it's been carried out by the bank. So they will say, look, they'll issue with an approval in principle. They're saying, look, we'll offer, potentially 300,000 euro, whatever it may be, and we will accept that then, and we will move on from that. We will need final confirmation in the letter of offer, which the bank will issue to you, and we will need a copy of that as well. But that's then exactly the amount they're issuing, and then we can plug the gap based on that. So we're not interested in your salary, not interested in your employment status, we're not interested in any of those, your credit history. All of that is dealt with by your mortgage provider in the bank. The maximum facility that is determined then by one of three things, not one of them, all three. The bill price, the cost of the home that you're purchasing, and that relates to the percentage of the value that you can get, back to my point of whether it's 20 or 30%. Again, the Help to Buy relates to that, so it's either that impacts also whether it's 20 or 30. And then the local authority area in which you're purchasing the property. So there is a concept of price ceilings. There is a price ceiling in each local authority area. We review those twice annually, and if we move on to the next slide, we can talk about them. So we've just renewed them. New property price ceilings from the 1st of January. We updated 17 of the price ceilings around the country. There are 32 different local authority areas. So we updated 17 of those. So you can see there, just as a quick example, all the Dublin local authority areas, Wicklow and Cork City, are at 500,000 euro. So basically what that means is you can purchase a property and avail of the first scheme on a property up to 500,000 euro. If it's 501 or 505,000 euro, unfortunately, you will not be able to use the scheme. It's a bit like the Help to Buy. There is a cap on it. And the reason that's there, sometimes people often ask, well, why would you do that? Well, the reason we do that is to ensure that inflation in relation to property prices is somewhat controlled, and that we're not contributing. There's often accusations that we're contributing to house price inflation. We would argue there isn't. That we don't. And the reason we can actually stand over that is that we have the ceilings in place, and the analysis shows that we're not contributing to house price inflation. But that's just a little bit of background. So if we move on there then, just how does the equity share work? So the next slide there actually gives a demonstration in relation to how. So again, the numbers here deliberately kept them simple. So let's assume on day one, you want to buy a property for 200,000 euro. I know there aren't any, but just assume. And we give you 10% of the value. So we give you 20,000 euro on day one. You have 180,000 between your mortgage and deposit. We give you 20,000 euro. So let's say 10, 15 years down the road, property prices continue to increase. And the great news now is the property that you bought for 200,000 is now worth 300,000. So everyone is in the money, so to speak. So how much will you owe, assuming you haven't made any repayments in the meantime? So the important point here to understand is that it's not the amount we give you on day one, it's the percentage that we give you. So if we give you 10% of the value of the property on day one to make the purchase, The amount that you will owe us whenever you come to repaying it, whether that's in 12 months' time or 12 years' time, is going to be 10% of the value of the property at that point in time. So in this scenario here, where the house price has now increased to 300,000, it's 10% of 300,000. So you owe us 30,000 euro instead of the 20 which we gave you on day one. Now, the important point here is that if the property prices go down, and we all hope that won't happen, but if they did go down, well, then we're at a loss because it's 10% of the new price. So let's say they went down to 100,000 instead of going up to 300. Then it's 10% of 100, so you will owe us 10,000 euro instead of the 20 which we gave you in day one. Now, some people say, oh, well, that's unfair because sure, you're gaining as the property prices go up. Well, we would argue, yeah, we give you 10% on day one. We'll take back 10% when you want to redeem it. So you still get the uplift on the 90% or whatever it is, if it's 80, if we give you 20. So we think that's fair. I mean, if you think about it, you probably would agree, but not everybody might. But that's the way it works. And we want to be very open and transparent about that because it's not in anybody's interest that somebody takes out the scheme and doesn't understand. And this is the important point really is it's not the amount we give you, it's the percentage. That's what you'll owe when you come to repaying. So we just move on to the next slide there, Connor. Just some of the details then around service charges, etc. on the next one. So there's no interest charge. This is an equity product. It's not a debt product. It's not a mortgage. So it's an equity product. So there is no interest. However, at the beginning of year 6, there is what's called an annual service charge, and this kicks in. So for the first 5 years after year 6, in other words, the first 1 to 5 years, there's no charge. From year 6 to year 15, there's 1.75% on the amount you drew down. So it's not on the value of your property; it's the amount. So if we give you 60,000, it's 1.75% on your 60. So it's about over 800 euro on 50,000. So it's not a huge amount, but look, it's still 800 or 900 euro. So, but the key thing about this is this might fall due at a time that doesn't suit you because you might have a young family, you might have kids going to college, whatever it might be. And the key thing here is, and this is very much how it differs from a mortgage, we will write to you about 6 months in advance of this falling due and say, look, this will fall due in 6 months' time. Do you want to pay it or do you want to roll it up? And what we mean by roll it up is you can refrain or say, look, I don't want to pay this now. It really doesn't suit me. And we'll say that's absolutely fine. And what we will do then is we will roll that up, but we roll it up on a simple interest basis. So what that means is we're not going to be charging you interest on interest. It's non-compounding. If you remake on a mortgage or have to get a repayment break or whatever, you're going to be paying a fairly heavy penalty in terms of interest in that. And you can start paying your service charge at any point in time that suits you, or you can say, look, I don't want to pay it at all. Now, just to be clear, it will have to be repaid at a point in time. So when you come to redeem your equity, if there's any outstanding service charge, you will also have to clear that. So it will have to be paid. The key point here is there's total flexibility around when you pay. And the same applies into the equity facility. And again, a key differentiator from your mortgage. There is no fixed repayment date in relation to the service charge. You repay whenever suits you. That might be the first year, it might be the 12th year, it might be the 20th year. It's entirely up to yourself. But just bear in mind that as the value of your property increases, the amount you're going to owe us is going to increase because it's back to that percentage. So I suppose that's why maybe you should pay it as soon as you can. But the key point here is if for whatever reason, be it, somebody might be fortunate enough to become ill or lose a job or whatever, you don't have to be worrying about the first home scheme. We're not going to come knocking on the door saying it's time now that you repaid. That will not happen. However, there are 4 scenarios in which you must redeem the equity share. In other words, you must pay it back and you must pay back any service charge outstanding. First one is a sale of the property at any point in time post-purchase. So that's no different to your mortgage. That in that scenario, it is like your mortgage. If you resell your home, you're going to have to repay your mortgage as well, and you will have to repay us. The property is no longer your principal private residence. So look, if you're fortunate enough to be able to go off and buy a second property, and you might move into that one, and you want to use this as a rental, then you will have to repay us because again, this is not intended for rentals. It must be a principal private residence. If you remortgage with a non-scheme lender, so what I mean by that is if it's a bank other than the 5 that are called out there at the outset. So if you go with somebody else, an alternative lender, that's fine. but you must repay the first home scheme. The reason for that is that you will recall that I said those banks are putting funds into the first home scheme, so it's only fair that if you go and remortgage with somebody else, well, then you have to pay that back so that we can give that money to somebody else. And then finally, the death of the owner or owners if it's a couple. So again, I suppose this, if you think about this, what that really means is you could potentially stay in the property for the entirety of your life and not make any repayment. You don't have to pay the equity or you don't have to pay the service charge. Now, our strong preference is that you would, but I suppose the key point is you don't have to. And what would happen in that scenario then is your estate or whomever you would leave that property to, that fee would have to be paid before they can do anything with it. So it'll be up to them then to repay that at that point in time. So then just moving on there to some interesting facts, I suppose, around the scheme, and Colin has already touched on some of those. So we're up and running now since July 2022. We've had over 20,000 people register onto the scheme. We've over 9,000 people approved for the scheme, and that's 4,900. That was at the end of December. We are about a week or 2 weeks away from our 5,000 drawdown. So that's 5,000 individual or couples who are now in homes that are part funded by the first home scheme. So, if you're nervous about it, it's well tried and tested. It's government backed. It's backed by the banks. So, we are a private company, but we're a private company owned by the state and the banks. So, and our board is made up of the shareholders. So we're not a fly-by-night operation. We're here for the long term, and we're a legitimate entity, I suppose, is the key point. So then just the final slide for me there. It's just how do I apply? So if you want to apply, you go onto our website, firsthomscheme.ie. There's all of the information relating to the scheme is on the site. A lot more than I've been able to cover here today. But in addition to that, you can make your application online. It takes about 40 minutes. And the entire process, with the exception of your contract at the very end, is all online. So we will send you your approval online. Everything is done online. At the very end, you will get your contract in the post. A copy of it will also go to your solicitor, who will then you will sit down with your solicitor. They'll talk you through, explain some of the details. We've tried to keep it as simple as possible, but there are some legal details, as you would expect. The solicitor will go through those, which explain them to you. And you can sign that contract and sign your mortgage contract on the same day. And then we will, in the same way your solicitor will contact the bank for your funds, they'll contact us for your funds. We send them to your solicitor, and the solicitor will close your sale with your mortgage and your first home scheme. And this will all happen in the background, and it should happen in tandem. And it is generally quite smooth. The odd time there's a glitch. If there is, we sort it out very quickly. But for the most part, it works very well. And, as I say, all of that can be done pretty much online. So that's all from me. Unless there are any questions now, Colin, I'm happy to take them.
Thanks, Michael. That was really comprehensive. In fairness, I'd say there's a lot of questions that has been coming in on the Q&A, the live chat around the caps, the service charges, the interest rates, the amount of equity you can borrow, and I think you've probably covered all of those very, very well in the presentation. There's just one that's come in, and I know you did cover it, but just to refresh it again. I bought a house in 2003 on my own and I sold it in 2014. Is it possible for me to avail of the Fresh Start scheme or any other? So I know you addressed it, but probably just to reinforce what the Fresh Start scheme is.
Yeah. No, unfortunately, you don't qualify under the Fresh Start unless you were in a relationship and there were two people in that relationship and you sold the house as part of a separation, divorce, whatever it might have been. Now, if that was the case and you can prove that, well, then you do qualify. But if you purchased the home by yourself and just lived in it for a number of years and then sold it, unfortunately, you don't qualify under the Fresh Start principle.
No, that's great, Michael, and thank you very much again. Great presentation.
Thank you.
We're going to hand over now to Marguerite. Marguerite is going to talk you through some of our new developments that are currently for sale, but also what we have upcoming in the first half of 2026. And she's also going to run through the other main government initiative, the Help to Buy scheme. So I'm going to hand you over to Marguerite.
Thank you, Colin, for that introduction, and thank you to everyone for joining us today. for the webinar. So as Michael mentioned, we have another very important scheme called the Help to Buy scheme, which many first-time buyers use in order to assist with their deposit. So this scheme was recently extended to the end of 2029. So if you are starting out, you do have peace of mind that this is going to be there for the next few years. You do need to be a first-time buyer, similar to first home scheme, or you can be self-building your first home. It is subject to a cap, which is 500,000. And you also must be taking out a mortgage with the property, and it must be at least 70% of the mortgage value. So basically the way it works is it's basically a rebate on the tax you would have paid in the last 4 years. So obviously in order to do that, you would have need to be resident in Ireland. So you can check what you're entitled to on revenue.ie, which I'll get to, but essentially the claim is made up of either the lesser of 30,000 or 10% of the purchase value of the new home, or 10% of the approved valuation if it is a self-build. So moving on then to how you can apply. So again, it's all online and it's through Revenue. So you can find that link there. It's revenue.ie or ross.ie. So in terms of the process, there's a few stages to it. So in advance of starting your search, you need to go through the application stage. And this is just really to figure out what you can afford and how much you're entitled to. So this is called the application stage. You'll be given an application number and an access code, the important claim amount, and when this would expire. Next, then, once you have that information and you have those numbers, you can start looking for a property. And then you can, once you find a property that meets your criteria, you can move to the claim stage. And coinciding with this, you'll be getting your loan offer from your lending institution, and also the contract, so the sales contract through the developer. And at this stage, you'll get a claim reference number. And then really you're just waiting for the property to be ready to be constructed. And then you'll go to the verification stage, which is through the developer. And then you'll get you'll require your claim reference number at that point. So look, there is a process there, but it's very user friendly, and we are on standby to assist you with that. So moving on then to some schemes that we are either selling or going to be launching soon that you could avail of these schemes. So first up is Plovers Wood in Athlone in County Westmeath. So for those of you not familiar with Athlone, it's right in the heart of Ireland. It's going to be super first-time buyer friendly because most of the houses will be under the first home cap and the Help to Buy cap of 400,000 in Westmeath. We will be launching off plan. So what that means is we won't actually have a show house for people to view for the first launch, but we will be able to talk you through plans and finishes and everything like that. And it is in the middle of Athlone, so really central in an Athlone context. So definitely want to check out and to keep an eye on. Next up then is Usher's Mill, which is in Drogheda in County Louth. We've been selling there now for a number of years. It's really popular with first-time buyers and people even relocating to Drogheda. So we're well into launches there. So we do have show houses to view. We're currently selling there with our 3-beds terraces starting at 395. So just to break that down on how that would look from a monthly repayment or affordability point of view, you would need a household salary of about 70,000, and that is assuming you do use the Help to Buy in the First Home scheme. And with current interest rates, you're looking at about €1,200 for your mortgage repayments. So then moving to Clane in County Kildare, this is actually an apartment scheme we're selling with 2-bedroom apartments there for €360,000. And again, you can avail of Help to Buy in First Home. So from an affordability point of view, you're looking at €1,000, just over €1,000 per month on your repayments. So finally then back to Dublin. This is a scheme in Lusk in North County Dublin. We will have some 2-bed apartments and 3-bed duplexes coming in the next couple of months. And again, you will have some options to avail of First Home scheme and Help to Buy. So moving on then to Dublin and kind of the wider Dublin area of what we'll have coming. A really popular scheme we've been selling is Woodward Point in Shankill. So a lovely South Dublin location on a dart line. We have a mix of 1- and 2-bedroom apartments there starting from 360,000. So again, you can avail of Help to Buy in First Home scheme, and they are currently for sale if you're interested. Then Avonlea in Adamstown. So Adamstown is in West Dublin. It's on the train line, again, very central. And we will have a new release in Avonlea of apartments and duplexes in the spring with some options for Help to Buy and First Help. Then Park Lane in Cherrywood. This is South County Dublin, again on the Lewis line. Excellent amenities nearby. You're overlooking a park there. We've sold houses here to date, but we will be launching a new home style of duplexes, so large 3-bedroom duplexes, and they'll be coming in spring as well from a show duplex. Finally, then Haley's Hill. We're just on our final release here. This is quite close to the coast in North County Dublin, and we'll be selling 1, 2, and 3-bedroom apartments and duplexes in the spring, and there will be some options for Help to Buy there as well, so to keep in contact about those. Then going outside of Dublin, so particularly Cork and Galway. So Rahan View is in Mallow in County Cork, and we have options there for First Home and Help to Buy. The 2 beds there start at 320,000 and 3 beds for 390,000. So again, affordability wise, your mortgage repayments would be less than €1,000 on the 2 beds. Then to Galway, this is County Galway, where we have 2-bed mid terraces starting from 450. So with the recent First Home cap increases, this would now fall into First Home scheme, which is great. And then all of the houses qualify for Help to Buy. Then in Galway City, again, we have apartments, a selection for 1 and 2 bedrooms, and they're currently for sale as well. So moving on then to just some tips. So as I mentioned, with the affordability calculator, that's really useful because you can pop in all your details and it will tell you kind of how much your repayments will be, what you can qualify for. So I would say take a screenshot of that. And then also if you are kind of having a look around at what's available, the Sherry Fits website is really useful. And if you do see the FH or the HTB buttons, that means that you can avail of those schemes, because obviously if there is different caps, it can be, so there's a lot to get your head around. But that should help you with your search. Then I suppose a question that comes up with us a lot is tips really on their journey. So if you could move on, Conor, there's just a list here of tips that we would give people when they're starting out beyond, I suppose, the financials. So really, location is obviously incredibly important. So if you are considering a new location, we would say before you go to a launch, go to that location and explore the area first. Check out what the commute time is like, what's important to you. If you're obviously if you have a young family, you want to check for schools, you want to check for creches, that kind of thing, where the local shops are, what new development is coming. And then when you're kind of satisfied with the location, then is the time to get into the more granular, the site map, what the floor plans are like, how many bedrooms you need. Is orientation important to you? So when we say orientation, we're typically talking about the rear garden, which way it faces, or the balcony. So if you're into evening sun, you'd be looking for a west orientation, or morning sun would be east. Then you may look to go for south, which does command a bit of a premium. So there's a lot of things to think about, and I think if you can be as well informed as possible before you get to the sales office, it just means you won't be disappointed on the day, or maybe go for the wrong house that doesn't really suit your needs. We always say contact the agent directly. We do deal a lot over email because we're dealing with a lot of volume, but if you are really interested, I would say contact the agent in particular and have a chat with them and tell them what you're looking for and your position, and we will do our best to help you make sure you get the house that you're looking for. And even if you're not ready to buy, go along to the open views, check it out in person, see the show house, just do as much research as you can and shop around, because obviously it's a huge decision. And that's really it from my end. So again, this is just QR codes for the links we were discussing. So feel free to take a snap for later. But yeah, Colin, if there's any questions coming in, I'd be happy to answer.
Brilliant. Thanks, Marguerite. That was great. I suppose there's lots of different questions. There's lots of people asking around new developments. There's a good few questions coming in about have we got anything new in Drogheda. You've obviously covered off Usher's Mill, and lots of questions around the other properties you've mentioned and new schemes. I suppose that, yes, our website contains all the new developments. So sherryfits.ie, and in the new home section, we have all our developments that are currently for sale, and also ones that are going to be launching in the next number of months. So you can visit there. But the same question always comes up, and I know you've touched on it with the tips around how do I get, how do I ensure that when a first phase comes up, that I'm up to speed on what's been launched, and how do I kind of guarantee that I can get myself a reservation on a house? You
Yeah.
a little bit on that.
Yeah, and I think it's just reinforcing the staying in touch, because if the agent knows your name, they know you're keen, they know you've got all your documents ready, and that is really the best chance for getting, I suppose, in with information before we might send it out to the database. So really it's staying in touch, and don't be nervous about, reaching out multiple times. We often get like, oh, we don't want to be annoying agents. We are there for that. We're there to answer questions, and look, we want your journey to be as smooth as possible. We don't want people to miss out. And look, we'll work around whatever needs to be done. So yeah, I just reinforce strike relationship with the agent dealing with it.
No, that's great advice. Thanks, Marguerite. We are just a little bit over today, so I think that's covered everything. Just like to thank Michael, Ronan, Marguerite for their presentations. To remind everybody that the recording will be emailed out with all the slides from the webinar. It'll also be available at a later date on our website. So in reality, all I want to do is thank everybody for attending today. Keep an eye on our social media channels for our next webinar over the next couple of months. And, on behalf of our team, best of luck in your search in 2026. Thank you very much.
Thanks, Colin.
Thank you.